Hello and welcome to Beyond the Deal, the show where we go deeper than the numbers. And today we have another very special episode for you. My guest is none other than my business partner, yet again, Mr. Mike Angelo. And we wanted to talk to you today about the differences between being a multifamily operator and getting into development, because we actually have two different development deals. One is a ground up multifamily construction, and the other one is a commercial retail redevelopment. But the point of this is that there are a lot of differences and there's a lot of things that people should know. So, Mike, welcome to the show yet again.
Hey, man, great to be here once again. Love talking about this stuff. Love what you're doing, and glad to be a part of it.
All right, so let's get right into it. What is the difference, right? What would you say are the main differences between the return structure from a development deal and how much money can be made versus your traditional multifamily?
Yeah, great. It's a great point. And, I think starting out, it's easier to understand value add multifamily. We've been living, breathing that for 5 years now. And I think it's somewhat predictable, not always, right? But relatively an easy model to understand. Development just has so many different layers of complexity where the reason most people don't do it is because it is so complex. It is potentially higher risk depending on what you're doing. And we're going to dig into that, obviously. But the returns can also be phenomenally better, right? We're talking 2, 3, 4x, just depends on what you're doing, how you're doing it. There's so many creative ways to build a capital stack. That's a whole episode in itself, right? What you're going to do with it at the end. Are you going to hold on to it? Or are you going to sell it, right? Like that's another piece. So there's a lot of ways to navigate that. And I love that we're going to get into this because we have two projects, obviously. One's a redev and one's our ground up project. And we're in different timelines on both of those. And so, we can navigate that as we continue this podcast.
Yeah, absolutely. And I agree completely. I know if you go out there right now, there's probably 1,001 guru courses teaching people how to do multifamily, right? Because multifamily is accessible. It makes sense. You got a building, it already exists. There's tenants in there. They pay the rent. You make cash flow. But development is kind of this much more sort of ethereal thing, right? It's creating something from nothing, and there's a lot of moving parts. So when we first got the hankering that maybe this is something we might want to get into, what was the first thing you did?
Yeah, first thing is, you look at yourself in the mirror and go, am I crazy for trying this? And why do we want to do this? So as you know, right, my background was in construction supply, and we talked to developers, we worked with contractors, and I saw that side of the business. Never really understood it from the investor side or the developer side. But the real interest was, again, creating something from nothing, just making massive investments and improvements in a city that was underserved, right? In this case, Casa Grande, we know about that city and all the growth. And what that does is that basis is so low, coming out of creating something from nothing just produces significantly more equity in the long run. Now, provided the caveat is you have to execute, right? And there's lots of pieces to it. But we just saw an opportunity to invest in a market with apartment buildings. That's what really got us into that market, right? So ground up project. I don't know if you want to start with that one first and talk about the ground up deal, or if we go right into the other deal.
Let's talk about, because we already did a whole episode on the other deal. So hopefully people listen to that and they're pretty familiar with what's going on there. But let's talk about, you and I had no previous experience with development. And actually, when we got into multifamily, we had no previous experience with multifamily. But what we did have is somebody that we knew who could, be our Sherpa on the guide, so to speak, of how to get into this specific niche. So how did you find that person for us with ground up development?
Yeah. And just to your point, if just because you want to do something, you need to figure out how you're going to do it and put people around you that are better and more experienced in that space. And so we were blessed to basically meet someone that had already been doing this for 25, 30, 27 years probably now, built a lot of multifamily, a lot of single family, a lot of office space. And we found just incredible alignment. Now, he was pretty hard to find. I want to just talk about that, right? Is probably talked to 150 people about what we wanted to do. So it was literally Michael and myself pitching this vision of being developers, which coming from the multifamily world, it is literally a different game. It's different language. It's different everything. And just happened to know someone that knew someone that was in the space and basically told them what we wanted to do and how we wanted to impact that market. And found that alignment, found the vision that was similar, right? And so we were able to use his skill set to help us navigate, because we did not know what we're doing 100%, right? I think it's fair to say that, right? That we didn't know. And we asked all the questions and he answered, hey, start with this, go with this. Our job was to essentially bring the equity to the project, right? And so he's helped underwrite it. What's that?
And the vision.
Yes, absolutely. The vision, starting with the vision, how we do it, and then taking that vision and really turning it into a tangible good. And there's, besides our developer, there's multiple people within that actually help you deliver that vision.
Right. So really good piece of advice there, whether you're talking about, getting into development or whether you're talking about raising capital. This is something I tell my students all the time, is you have to be willing to tell everyone around you what you're trying to do. Even if it's just going to buy a multifamily, even if it's to buy your first house that you want to flip, right? You need to own that identity and tell every single person that you speak to, this is what I'm trying to do right now. Because you never know who will know somebody who can help you. Or maybe that person has some cash and they want to lend it to you or invest in you, right? So you need to start owning that as part of your identity. We are real estate developers now. This is what we do. We develop real estate, right? So we meet our developer partner who gives us guidance. Obviously, first we buy the land, right? That's really step one, is you got to identify the right piece of land in the right market. But let's talk about some of the other moving components. So now you've got engineers getting involved, architects getting involved, you've got horizontals, you've got verticals. What's kind of the next thing in the process?
Well, I would even back up a little more, right? We bought that piece of dirt, but that was our 10th offer, 10th different site. And so how do you know what's going to work, right? We talk about underwriting as being the foundation of multifamily analysis and profit at the end, right? Like, you got to be able to underwrite it. Well, how the heck do you underwrite a piece of dirt, right? That was step one. And so what we did was we went to our architects that we identified, that we said, hey, we really like what you guys do. And we said, we need some free help. We need to basically not pay you anything, but this is what we want to do. And we need you to help us build, we want to build somewhere between 150 to 250 apartment buildings on this ballpark size of land. And so every time before we put an offer in on a piece of dirt, we had to do some homework. Is there water? Where's the infrastructure? Is it even zoned correctly? I think just starting with that, right? Is it zoned? What is zoning, right? So you have residential, you have commercial, you have industrial, and there's certain parts where you can't build 3-4 story apartment buildings. And there's other parts you can, but you don't want to, right? And there's other places where it's super cheap, but that's because you have to bring 4 miles of water in, or there's no power. And so we had to do all those pieces of homework, and we leveraged, of course, brokers in the area. We leveraged our developer to say, hey, these are the markets we're thinking. These are the sub blocks, block by block, right? Because the block plot across the street could be terrible. Matter of fact, the plot of land across the street from our current site is terrible because there's a ravine running through it, a wash that essentially eliminates like 2/3 of the acreage that we bought. Did the broker we were going to put an offer in tell us that?
No, you had to find that out the hard way. Yeah.
So we could have been real dummies and bought that piece of dirt, found out after we do our civil studies, because you don't want to do that until you buy it, to go, oh crap, our apartment buildings have to be split up because there's a wash in the middle of our site. That wouldn't be very good return for our investors, right? Because we just waste a lot of money. So you can go down so many rabbit holes, Michael, on this deal. Is we started with finding sites, but we had to basically take the buildings and put them and see if they fit on our model. And so our model was around that 150 to 180 units. And that's where the math made sense for us on this particular, way of budgeting construction.
Now, that's probably a perfect segue into what even is entitlement, right? Because the last thing you want to do is buy a piece of land and then the city tells you you can't build that, right? And you've just taken on all the risk and got none of the reward, right? So what is entitlement? What is the process?
Very good question. So entitlement is really getting a space or a piece of dirt ready for building, right? Getting that site done. And there's probably 50 different things that you need to do. So one, like I mentioned, is it zoned properly? And even if it is zoned properly, is it zoned for your particular building that you're building? So the residential class can be single family, it can be built to rent, it could be high density, low density apartment buildings, meaning a whole lot of them or a whole less of them, right? All those things factor in. So what we did is we started with some general plans and we said, hey, city, this is what we're looking to do. It's almost like an LOI. You're putting a letter of intent. And it's really a phone call to just the city to go, we would like to put multifamily here. What are your thoughts? Of course, this is after checking with a couple of attorneys, which is another team member that we needed, right? We needed a planning and zoning attorney, not just your everyday real estate attorney. These guys basically go to battle for you at city council meetings to help you sell this deal to the city, right? So we put our vision in, we have a ballpark plan, and we work with our developer and our attorneys to say, this is what we want to build, and we go submit it to the city. And the city puts us through like 4 different levels of approval. And the final approval is, yes, we have a stamp. We can build this site at the city level. That's one type of entitlement. The other type is, okay, well, where's your water? Is your utility access approved? In this case, our city of Casa Grande wants to expand the road. Well, we have to bring the traffic department in to say, well, yeah, but this means you're going to lose this much acreage. And when we do the final plotting, it's going to take away a little bit of land. So there's so many areas. I mean, we spent almost 18 months entitling, right? So I think maybe that's probably the best thing to start with is if you called me today and say, I have a piece of dirt, I want to build these apartments on, great. In 18 months, we'll be ready to build, right?
Exactly.
And sometimes you guys look out, I'm sure everyone drives by and sees these projects moving. Oh my gosh, it was dirt yesterday and all of a sudden it's moving. Well, you don't see the 2 years of work behind it, right? Yeah. And that's the reality. Some projects, yes, get fast tracked and depends on how much money you're spending or who you are. But most projects, 18 to 24 months of work to get all that stuff done and ready.
Well, and that's a perfect explanation for why when the property is actually entitled, it's so much more valuable, right?
Yes.
The moment that you get your entitlements, that value can shoot up. And there is actually a market for developers who let other people do all that work and then come in and actually build the thing, right?
That's right. Yeah, it's called land flipping, essentially. They'll come in and, they may not even do the amount of work we've done so far because we're looking to build it. But they might just go and parcel out certain areas and get those zoned and sell it, right? And there's a very big market for that because, again, what is it saving? It's saving time and headache with, the D.R. Hortons of the world and the Lennar Homes, the biggest home builders in the country. They look at plots of land. They don't have a whole team that just goes out and does this work. They typically work with other developers that just split land up, right? And they've already done the homework. They know where the water is, and they'll go out and pay a small fee for that. And it's a good little niche business to be in for sure.
Yeah, actually, we had a guest a couple months ago, Alice Chen, who does exactly this. And
that's right.
She absolutely crushes it with the land entitling and selling them to home builders. So there is a huge market there. But, so we get our land entitled. What happens next?
Yep. So as that's happening, we're also working with our architects and then who's going to build this thing, right? You want to get a general contractor in place to then start to go through the plans. So you have a set of plans that have to get submitted through the city for kind of first level of approval. It's not permit level approval. It's just basic entitlements. They want to know what's the outside going to look like? Is there going to be 3 or 4 stories? The general contractor is going to go, okay, let me put what they call an ROM, a rough order of magnitude. It's just a ballpark quote, really, right? But think about, 176 unit apartment complex. There's a lot of trades. You got concrete, you got framing, you got roofing, windows, electrical, plumbing, so many things, right? The GC can't put all that together willy-nilly. So they take the plans and they go through it and they actually send it out to bid. They go out to different contractors to say, hey, we're looking at this project. It hasn't been awarded yet, but if you want to be on our team as a subcontractor, put in your numbers. Go through your set of plans and they'll get the plumbing section or the electrical section and they'll put their stuff together and they'll send a bid back. The GC then combines all that stuff, right, and puts it together on a long bid sheet, and we kind of go through it. And we've done now several iterations. Matter of fact, it's important to talk about this because timing in the market is really critical. Last year, really tail end of 2023, we just saw huge spikes in material costs. And some of that's come down and some of it hasn't. But really, those contractors a year and a half ago were so busy that they were throwing out quotes really willy-nilly at 30-40% markup because they were so busy. Well, guess what's happened, right? The market has shifted. Projects have come to a halt. And those same contractors are now back to where the pricing is very fair. And so we've seen almost a 10% reduction in our vertical costs. So when we say vertical costs, this is the cost to build it from the slab up. 10% reduction in material costs. That's like $5 million, right? Yeah. So we're not talking chump change here. Significant reduction in those costs from a material standpoint, but also because the labor market is a little bit more conscious of looking for because the work is dragged, right? So it's a good time for us. It's a good time for us.
Absolutely. Hey, really quick, I hope you're enjoying this episode. I just wanted to stop for a second and thank our sponsor, which is me. Nimble Capital Group is my boutique investment firm where we help passive investors access deals built for cash flow, equity growth, and powerful tax benefits. And if you think you've ever wanted to learn how to raise capital and become a GP yourself, I coach a select group of students each month, most of whom will raise over $500,000 within their first 60 days. So check the show notes in the description below to book a call. I'll see you there. So you've got your horizontals, right? And let's talk about time frame. So you get your entitlements, you get everyone involved. Actually, before we get to that, I want to get to one other thing. What happens when ordinary citizens, every time there's a development around, there's a sign that goes up saying there's going to be a city hearing on this date. What happens when the ordinary citizens show up and protest the building of something, right? Yeah.
Yep. So we've had that, right? So we put a big yellow sign up. Proposed project is the signing, and then it's got an approval. But then there's a date, and actually everyone gets a postcard in the mail. Hey, this project is coming. Anyone within a certain radius of that project. So you as a citizen can show up and contest, or just at least make a statement as to why you feel like it's not a good thing. We actually had that, right? So I went to every city council meeting hearing that we had during that entitlement process, and there's a gentleman that lived in a neighborhood just adjacent to our site. And his complaint was, well, when I look east now, I don't get to see the beautiful mountains. I have to look at this 3-story building that's, going to completely block my view. And so we took it into consideration, and we said, what else could we do? And we actually worked with the architect to take that side of the project where there's one long building and make it a 2-story building instead of a 3-story building, right? So we lost some acreage, of course, or I'm sorry, unit count, but we were able to make up for it. But we conceded. Now, if we didn't do that, we still would have gotten approval, right? But what we wanted to do is we wanted to be good neighbors and find a way to say, hey, this is one neighbor. Other people might have complaints too. Let's find a way to do that, right?
Absolutely.
That's how you work with the city and work with your neighbors, right? So
absolutely. There is an ethical component to this whole game. And, I think developers often get a bad rep. I think in the media and stuff like that, people say, oh, you're gentrifying our neighborhood. You're raising the prices. It's never going to be the same. Yada. There's a lot of resistance to that in a lot of neighborhoods. But the counter argument is we have a massive housing shortage and we need more places for people to live, and if we can provide that, we would love to serve the community.
And I think along that line, I think a lot of folks don't realize is, well, who pays for your road improvements? You guys want a signal on that 4-way street? How do you think it's going to get paid for? Developers pay for that. Yep. Your tax dollars that get produced by the income that we make, right? The property gets built. We collect rent, we pay taxes, right? Mm-hmm. That property taxes pay for improvement. So it's kind of funny how folks are like, I want my city to stay small and the same, but I also want a grocery store down the street. I also want a big signal light. I want an off-ramp, right? Mm-hmm. All those things come because of growth and demand. And, that's just the way it works. And so, there's a careful way to navigate that for sure.
Absolutely. Okay. So we got our entitlements, we got our approvals, we lowered the building, we did all this stuff, right? Now, horizontals.
So let's talk about horizontal. Horizontal is civil construction. What is that? That is basically grading the dirt. It's installing all the underground. So you're talking about retention basins. So in Phoenix, in Arizona primarily, we have a lot of retention tanks that basically these big giant water tanks that collect rainwater, stormwater, and eventually it'll soak itself down into the ground, into the water table. 80% of Arizona's water comes from the groundwater, by the way. And a lot of it is because of these retention ponds. So we have to put that in. We have to put the roads in, the sidewalks and the curbs, and of course the concrete slabs. So that's all our horizontal. That process is almost ready right now, meaning we could submit for permits. We're obviously working on our financing, Michael, right? That's a whole other side. It's probably another podcast. It's financing, but we could submit for permits. It takes about 30 days. And once we get that permit approved for horizontal, we can start construction work on that side. And while we're doing that, we can then submit for vertical permits. So all our construction design drawings are done. That was what also took a long time, 18 months, and a whole bunch of money, by the way, to get all these construction drawings ready. And I think I want to go back really quick, Michael. You said entitlement, right? Our project is fully entitled, but we also are fully entitled with full construction drawings. And they're not always the same. Sometimes you have a entitled property, but the drawings aren't done yet because somebody wants to tweak something, right? Ours is ready to go, packaged, ready to build, which again adds value.
And so, I guess it's project by project, but would you say a rough estimate for doing horizontals is about 6 months?
Yeah, it can be 3 to 6 months usually is about the timeline for that. Yeah, out of a total, call it 18 to 24 month schedule, that first part is about a third, right? A quarter to a third of the time.
Got it. Now, I want to shift gears here because we've mentioned so far, this is about the point that we are with one development, but now we have a second development, a redevelopment. So the building was already there, and we basically tore it down to the studs. Can you talk about the differences in those types of projects as it comes to dealing with the city and the kind of things the engineers expect?
Yeah, I think it's different kinds of challenges. You still need that contractor partner, right? You still need the brokerage and the firms to help represent you. We don't need to get an attorney necessarily involved on zoning because the zoning is done. It's already a commercial building. Now, if we were going to rezone it into something else, that would be another story, but we weren't going to do that. So that part was actually somewhat easier. It's really then working with the architect to kind of formulate what's the inside going to look like. And this brings a different set of challenges because you have an existing building that's built in 1958, and it's been many things over many years, right? Which means there's things on top of things on top of things, right? And so the biggest challenge was really demoing it, to your point, getting it out to the studs and understanding what the shell looked like, and then rebuilding it back together to code, right? That's probably the biggest challenge is, hey, we think it's going to cost this. We need to get a lot of contractors in place to really understand how much is it actually going to cost. And, oh, by the way, we missed this or they missed this. That adds to the budget. So I would say redevelopment, one of the biggest differences is have a bigger budget for a contingency, because there's a lot of things you just don't know you're going to find. Like 2 slabs, for example, right? We have 3 different slab foundations at our property. So when you go to cut the slab to install, say, some plumbing, and you only budgeted for 6 inches of concrete, but you have 12, sometimes 18, well, that's going to take more time and effort, right? And the contractor is not going to do that for free.
Yeah, absolutely.
Right?
Yeah.
It's one of the things.
All right. Well, we are not by any means the experts, but we have delved into this, with just full force, right? And made this our identity and made this something we're going to do. And we've learned a lot of things on the way, and we wanted to share that with you guys on this episode. So, Mike, thank you so much for coming, and we hope that our listeners got a lot of value out of this.
Yeah, I just want to add something. If you're interested in development or redevelopment work, find people that are doing it, right? Find people that you align with core value-wise, and find some way to bring value to them. Bring them onto your project. Tell them what you're doing. That's what we did, right? We have made 1,000 mistakes in this process, but thank goodness we've had people around us to help us avoid the other 1,000 mistakes you could make, right? Mm-hmm. It's never going to be perfect. It's never going to exactly be on time, and it's going to cost more than you think. And so just plan for that, and you're going to be okay.
Perfect. Thank you.
Cheers.
That's a wrap for today's episode of Beyond the Deal. I hope you got some valuable insights that you can apply to your own investing journey. Now, if you've enjoyed this conversation, do me a favor, hit that follow button, leave a review, and share this episode with somebody who you think could benefit from it. It really helps the show grow and bring on even more incredible guests. If you want to go deeper, make sure to follow me on your socials. You can find the links in the show notes in the description below. Thanks for tuning in, and I'll catch you next time. Until then, keep going beyond the deal.